Next Gen Investing for a closer look at Best Buy, down about 3% today. Do want to broaden things out, though. Welcome a guest who's not new to the show, Patrick Mueller, our friend RFC and president at Bella Advisors. Patrick, great to have you back. It's been a few weeks since we'd last talked, so I'd love to start by just getting your thoughts on the market action we're seeing as we continue to get developments, or a lack thereof, perhaps, with the conflict in Iran.
Great to be with you, Marley. And yeah, we've seen a little bit of a downturn here in the first part of the year, and a lot of that has to do with the Iran conflict. And I don't know that we're going to see any short-term solutions to that. It looks like it's going to be dragging on for quite a while here, so it'll be interesting to see how things play out. But April tends to be a really good month in the market, so it wasn't surprising to me to see a bounce back up here. And I don't think it's going to be for a long time here, but I think for the next week or two, we could see a rally back up once we start reaching back up to those highs. And once we get there, though, I think we're going to see a big pullback. I think you're going to see a lot of institutional money starting to raise cash and take profits. And so I think we could start taking another dip down. So I don't think we're out of the waters here yet.
All right, so if we're not out of the waters, Patrick, what's your expectations for earnings season then? Because we're now really about to get into the thick of things here, and we've got a great, I know we've been saying uncertainty now for months, but we have a great deal more than we were dealing with at the start of our last earnings season.
Absolutely. There's so many things that have been heating up here. And so I think there's going to be some type of catalyst here in the near future. Hopefully earnings come out very strong as they're projected to. And but we saw, different components of that, like late last year with Oracle. But I think especially on the tech front, when we start looking longer term, if somebody big not meeting expectations, especially when it comes to the AI projections, because there's just been so much money that's been poured into that, and a rising tide raises all boats. So when we have some type of catalyst where earnings, whatever is going to set that off, whether it be the Iran war or earnings season, whatever that's going to be, we've been due for a pullback here and for things to start rechanging. So I would just caution people who are too overweighted in tech right now to be pulling some of those chips off of the table, as we have been for several months now, just kind of waiting for this to cycle through.
So, Patrick, as you're pulling some of the chips off the table, are you reallocating them into other sectors, or are you holding and waiting for more certainty in the market?
Well, some of the things that we're going into, I like ACYN by First Trust. So that's an ETF that's a structured notes where it's currently paying a 12% yield. So I like that cash flow right now. With all the uncertainty and everything that's going on, I love that cash flow that we can depend on throughout the course of the year. And we don't really have to worry about these ups and downs of the markets. And the other things that I like paying attention to right now is all the reshoring that's been happening with countries coming back from overseas, people starting to do manufacturing back in the U.S., making those pro-U.S. moves because of all the tariffs that's been happening. So we're seeing those sectors really taking off, and longer term, as that's a big push for this administration, that's going to be a longer term trend that I think people can start moving into.
And also with this reshoring conversation now, with some of the damage done to some of the facilities in the Middle East, we're having a bigger conversation about the energy play here at home, particularly as it relates to LNG. Are you looking at anything in the energy space domestically right now?
Yeah, I think it's hard to dismiss. And when it comes to energy here in the U.S., things that I like is taking a look at more so where things are going to be driven with AI moving forward. So there's a fund that I like called Grid that has been performing really well, and looking at all the infrastructure and everything that needs to be put in place. And, as far as your national companies for oil and gas, then, I think you're always going to look at the big players in the market, right? Whether, be Exxon, companies like that are really going to be profiting from this. And we'll see how things go longer term, but shorter term, with gas prices and oil prices going up, and then us being such a big proponent now of oil exports, I think that's going to be really good for a lot of U.S. companies.
And as we look at AI, you're certainly not the first person to mention the infrastructure play here, but energy a huge component of whether or not this AI data center build out really plays out to be as big as it is expected to be here. What do you think some of the market is missing that I'm not on a daily basis, at least, having a conversation about utilities potentially being the major winner in this AI rat race?
I think it's going to be such a huge winner. We see that here in Atlanta. We're the Silicon Valley of the South here. So you have all your big tech companies that have big facilities here. And we're seeing these big data centers just popping up everywhere. Actually, we get our internet from a data center right next door to us here, which is a nice little perk. But the amount of energy that's going to be needed is just astronomical. And as we're seeing more and more money going to this AI sector, you got to have the energy to be backing that stuff up. And so I think it's a good play longer term until things start maybe souring on the AI side of things, that it's going to be more hype than what is priced for in the markets right now, which is also a big thing to think about, because you had your top 10 companies and 40% of the growth of the S&P last year that basically all came from tech, and you had 40% of the S&P 500 that finished negative last year, and we're seeing that disparity as we've been going through a little bit of this turmoil the first part of this year so far. And it's really interesting to see how this is going to be played out, because things are so overvalued and so overweighted towards that. Then I like, moving towards those different sectors, Marley, and moving into utilities.
And Patrick, I'm glad you mentioned the hype, because we've been talking about how we've seen this great rotation and this rotation away from tech. Still not out of it, but certainly a lot of churn under the surface here. Some high expectations for earnings as we come into some of those big tech names. How are you working to protect portfolios right now with that as the backdrop? We've got this churn, the rotation, the uncertainty in the markets. Plus, we've got a new Fed chair coming and uncertainty around that. I mean, uncertainty is just sort of the word of 26 right now.
It sure is. It's going to be an interesting year for sure. And especially as you see oil become, oil prices going up so much, that's going to put a lot of pressure on the Fed, whether they lower rates, do they need to raise rates? So that'll be very interesting. But something we do, which is a great question, Marley, how do you allocate stuff? And we use something called the rule of 100. So take your age, and that should be the percentage of your money that's safe and protected from market losses. We don't want to be taking all that direct market risk. And then the remaining percentage, it's okay to take risk with. So if somebody's 50 years old, you should have 50% protected. Doesn't mean we can't get good earnings on it, just like I was talking about the ACYN ETF, right? We can get 12% yield on that stuff, right, while keeping it protected. So that's just a good rule, because it's not if it's going to happen, it's just when we're going to happen. And you just want to make sure that you don't have all your eggs in one basket, in that tech basket. So when things do pop, that we're not getting caught off guard by that.
Patrick, always great to have you on this show. Great insight there. Patrick Mueller, RFC and president over at Bella Advisors. Thanks for being here today. We've got a lot more.